I'm happy to. Okay, thank you for having me, and I'll be taking time to talk about hydrocarbon accounting from production to allocation. This list of some of the things I will be discussing, and I just hope I have the time to actually discuss all of this in this presentation. I'll try my best to achieve that. It's going to be an interesting one because hydrocarbon accounting has been an important topic in the oil and gas industry for the past a few years, and it has become a very important department in the oil and gas industry. So basically, when oil and gas has been drilled and the well is commissioned for production, the well flows through the flow line to a production facility where this oil and gas is processed. It could be two-phase separation and three-phase separation, but in this scenario, we have a three-phase separation. And the desired crude in this scenario flows through a pipeline also and goes through a latch unit, and for which it can be trucked also to a pipeline that can go to a refinery, which is the midstream downstream, and also to a trunk line to a terminal for exports. And where hydrocarbon accounting comes in place is in a commingling situation where you have more than one operator producing into a particular pipeline or a trunk line. It becomes a complex scenario to know who owns this and who have this. And that's where hydrocarbon accounting is very important. So most of my discussion today will be based on a commingling process, because that's where hydrocarbon accounting becomes very complex, and measurement is very key in such a situation. So two questions every operator will ask themselves, and even the terminal operator, is how much of this oil and gas actually belongs to each of these contributing parties, and how do we establish the ownership of these resources? And the solution is simply hydrocarbon accounting. And what is hydrocarbon accounting? Simply is just tracking oil and gas from the point of production to the point of sales. This is what ensures accurate reporting for revenue, taxation, and regulatory compliance. And why does it matter? Because it sits at the intersection of legal, engineering, and finance. It comprises of production allocation, production planning. It is the cash register of any oil and gas industry. It involves reconciliation. It involves production data management, the ownership, just like as I mentioned before, the ownership of this hydrocarbon fluid. It involves tracking the oil and gas from the point of production to the point of sales, which from your wellhead to your process facility, to the pipeline, to the latch units, and also to the terminal. In terms of engineering, we look at the subsurface and the surface, which is the production itself. In terms of finance, we look at revenue, JV partners, legal and commercial contracts and agreements, because when it comes to a commingling situation, there has to be alignment, there have to be agreements on certain contracts, your CHA and your CTA. So these are some of the things that makes up hydrocarbon accounting, and why hydrocarbon accounting is very, very important. And why does it matter? Who are the stakeholders? Who really cares about getting these numbers right? Because hydrocarbon accounting is all about numbers. Why do we need to get these numbers right? The answer is everyone. The JV partners wants to ensure correct revenue distribution between the different parties. The government, regulatory agencies, for royalty calculations, for taxation, production reporting. For the investors and shareholders, they want to know the reserve, how would they value the company in terms of financial transparency. Then for the operator itself, which is the management of the company, for strategic decision making, you have to make decisions based on what you are producing, informed decision, what you need to do and what you don't need to do. In terms of reserve estimation, your production forecasting, because it's from your hydrocarbon accounting, you can actually determine what you need to, your production planning, which is your production forecasting, and also carry out performance analysis. How are you performing? How is your reservoir performing? How is your production performing? Are you metering well? Is your measurements good? Are there discrepancy in your measurements? What's your allocation? Is what you are producing is actually what you are allocated for, especially in a commingling situation where you have one or two or more operators injecting into a particular pipeline. And also for the pipeline and terminal operators for scheduling, inventory management, and custody transfer. What are the hydrocarbon accounting process? Just like I mentioned before, for hydrocarbon accounting process, it all starts from the reservoir to the well itself, flows to the process facility, metering to either production meter or custody transfer point to the pipeline, finally to the terminal for allocation. And this process involves production planning, production measurements, production deferments, production allocation, and production reporting. So I'll be taking each of these process step by step as we go on in this presentation. Then when we talk about production planning, what's really production planning? It's just the process of forecasting, scheduling, optimizing oil and gas production to meet business objectives, contractual commitments, and regulatory requirements. What are its key objective is to maximize efficiency and minimize downtime, because you need to plan what you want to produce, how you want to produce it. You need to ensure that your equipment uptime are top notch. You need to know when you need to shut down for maintenance, annual or quarterly maintenance. These are some of the things you do during your production planning. And to meet sales and export targets, you have to plan. For example, you've given a target to produce 1 million barrels, and you have to plan how you need to produce that 1 million barrel efficiently without disrupting your production or your reservoir. You need to optimize performance, your reservoir performance, and maintain assets integrity. There's plan for also maintenance, which I've also mentioned, shutdown and disrupting commitments. What are the core components of production planning? One, we have the forecasting, we have scheduling, we have resource allocation, we have risk management, and we have integration. On forecasting, you look at short-term, long-term production volume. You use your reservoir model and historical data to do your forecasting. And also for your scheduling, you look at your daily, monthly production plan, and you have to align it with your pipeline availability and also your storage. It all depends on your own production philosophy. In terms of resource allocation, you look at the wells you are going to produce during that period. You look at your facility, you look at the manpower that is going to operate this process facility. How do you optimize your operators, your separators, your compressors, your pipeline integrity to ensure that your pipeline is available to transport your crude from one point to another. In terms of risk management, you look at uncertainties like what are likely will be the possible failure within that certain period of time. So you make a contingency plan to ensure that that does not affect you. Also, in terms of integration, this is where the hydrocarbon accounting comes in. The hydrocarbon accounting team comes in, planning your production, your metering, and also your reporting to ensure that everything you do is in line with regulatory body. I mentioned NUPLC here because I'm in Nigeria, and our upstream regulator is the NUPLC, Nigeria Upstream Petroleum Regulatory Commission. They are the one that's in charge of regulating the upstream industry in Nigeria. So when we talk about production measurement, this is where hydrocarbon accounting starts for, because what you cannot measure, you cannot actually account for. These are some of the meters we use in the oil and gas, common meters we use in the oil and gas industry for measurement. We have the PD meter, we have the Coriolis meter, we have the orifice meter, we have the ultrasonic meters. And all these meters, they are magnificent. But choosing your meter for your process facility, it entails proper study. You need to look at your maximum and minimum flow rate you are going to use for that facility. You need to look at your fluid property. So those are some of the things you look to choose the particular meter that fits and right meter sizing that fits your production facility. Because if you don't do this study properly, when you start producing, there's likelihood that you might not have accurate measurement, and you don't want that to happen to your production facility. Here we have the latch unit, the least automatic custody transfer. Then also we have the auto sampling system. This is one important equipment in measurement in the oil and gas industry, because this is what measure your basic sediment and water. And this equipment is one of the underrated equipment truly in the oil and gas industry. With my years of experience, I discovered that a lot of companies do not pay attention to this equipment, and that actually cause discrepancy in hydrocarbon measurement and also in accounting, because the right choice of auto sampling system is very key, because we have the inline, we have the inline, we have the fast loop, we have the jet mix. So your production philosophy will determine what type of auto sampling, using the right auto sampler in your facility to determine your water cut. And you also need to ensure that this sampling equipment perform perfectly, because if this sampling equipment doesn't perform perfectly, this is what is used to determine your water cut. And we know what the impact of water cut on our gross volume, and especially in a commingling facility where you have more than 2 producers. If your water cut is not measured accurately, it can actually affect your production allocation, and we don't want that to happen. So choosing the right auto sampling equipment is very, very important in hydrocarbon accounting. It's one of the most important equipment when it comes to measurement in the oil and gas industry. Then let's look at what production deferment actually is. I'll just really say is a reduction in production caused by an activity or breakdown, trip, equipment failure. It could be the quitting of your well stopped flowing at a particular time. It could be the breakdown of your pump. It could be the unavailability of your pipeline. That's what production deferment is all about. And it's always good to track and manage production deferment effectively, because it is the balance between if you look from this picture on the right-hand side of my screen, you see dollar here and you see your production. It creates that balance between your cash register and also your production. So it's very important that you track and manage your production deferment accurately. In a quick term, you can say production deferment is your integrated production system capacity minus your actual production. What this integrated production system capacity means is that what you can actually produce technically with the availability of all your wells and equipment in place. And when you don't actually produce that, if you actually subtract your IPSC from your production, you actually get your deferment, especially when your deferment is actually put data accurate. So when we talk about production allocation, this is one of the core components in hydrocarbon accounting. Production allocation simply means redistributing the production back to the different contributors. Meaning when you have 1 or 2 producers into a pipeline, they commingle and they produce, and you need to give back those production back to these individual producers. Also, bringing back your, allocating back your production to your various feed and also your various reservoir, which is called a back allocation. It's just a counterflow process. What was received and what you are distributing back from the main source. That's simply what allocation is all about. Here on my right hand of my screen, you will see feed A and feed B flowing into a terminal, and the production is measured here. So when you talk of production allocation, you have to give back to feed A and feed B. Usually, we classify it in tiers just to have a very good understanding of your production system. So if you come to this other diagram below, you will see that we have tier 1 and tier 2. And in tier 2, we have feed A and feed B because they are actually flowing through a common metering system. And we have feed C that just goes straight to the terminal. So the allocation here is feed A, feed B, and feed C. This has to be distributed back to individual. If you, firstly, in this scenario, this has to be distributed to feed A and feed B. And also from feed A and feed B, you distribute it back to feed A and feed B. On this other side, you have to distribute straight back to feed C. So basically, this is what production allocation is. And this presentation, we focus more on the production allocation because it's one of the key components of hydrocarbon accounting. In production allocation, we have the physical allocation and the feed allocation. The physical allocation is basically the commercial side of it, while the feed allocation has to do with allocation allocated to feed and back allocation to the various wells and reservoir. The physical allocation appointing volumes to individual contributor feed based on the agreed methodology. In this term, just like I mentioned before, there are agreed methodology and commercial agreement between each party, and this form the basis for sales revenue to the owners of this particular feed. The diagram below just simply elaborates on what I just said. Here we have feed A and feed B flows into a common meter. This is a latch unit that goes to the terminal for export. On this other side, they have the production facility. Here we have the production meters. From here, it is allocated back to the individual wells and the individual reservoir. This is what basically allocation is all about. And we have different types of allocation, but I'll be focusing on the proportional based allocation, basically because the proportional based allocation is one of the common commonly used allocation method in the oil and gas industry. The allocation by difference actually mean when one or two producers is producing into a common pipeline and one has a metering system in place and the other doesn't have a metering system in place. So the known volume is used to calculate the unknown volume. That's what allocation by difference is all about. Why for the equity-based allocation, it has to do with equity share of a particular producer. So the allocation is based on their particular percentage equity they have in that particular asset. Just like I mentioned before, the proportional based allocation is what I defined in the other slide. And your certainty based allocation is based on uncertainty. It has to do with your metering system. It has to do with your sampling system. It has to do with your equipment and stuff like that. And this is very good allocation method, but it has its own complexity, and that's one of the reasons it's not commonly used in the oil and gas. It's used in some part of the world, but it's not commonly used in the oil and gas industry. And the common one is a proportional based allocation method. This is a typical example of the proportional based allocation method. We have Q1 and Q2 flowing into a common metering system. This is our physical meter. This is our production meter, or you call it allocation meter. This becomes the reference point for the allocation to either stream 1, stream 2, and stream 3. This is based on the proportional based allocation. Allocation is conventional calculation method whereby distributing the stream to the commingling production for all transport systems receive the shares of output quantity in production to its input contribution. So basically, that's what the proportional based allocation method is all about. There, I'll try to look at data quality for hydrocarbon accounting and allocation. Your data quality increase. The well measurement has the lowest accuracy because many of the company operates for well test and measurement. They don't use the multi-phase emitter or digital method to measure their well fluid. And what they basically do, they do estimated well tests, which is the discontinuous well test method. So that volume is based on estimates. So because of that, we have lowest accuracy in terms of well measurement, except you are doing you have a multi-phase meter for each of your well to actually know exactly what your well is producing. Then for the station measurement, it's medium accuracy. When you now move to the terminal, that's where you have the highest accuracy. So, but allocation actually take place from at the terminal export, which is the physical point of measurement. So note that in hydrocarbon accounting, physical does not refer to a measurement accuracy. It simply means that at this point, the value does not change during reconciliation. So this is what the data quality is all about. Then this is a typical workflow for allocation. You start by calculating the reconciliation factor from the terminal. You look at the claim production from the contributing facility, and you divide the volume received at the terminal by this total claim. You have your allocation factor, and you apply that factor to the individual contributors. You have the station reconciliation factor. You take that reconciliation factor back to the facility where you have the wells, and you look at your well volume. You apply that factor, that volume by the total well volume, and get your well reconciliation factor, and you apply that station reconciliation factor to the individual well volume. So basically, this is just the workflow for allocation method from the terminal to the facility, from the facility to the wells, from the wells to the individual wells. So this is just the workflow of our allocation process is all about. And I think in the slide forward, I think I have a simple illustration of a mathematical calculation of allocation method. In terms of data validation and reconciliation for a commingling pipeline facility, here's what it's a workflow process for a commingling facility. Just like I mentioned before, I'm focusing on the commingling facility because that's where the complexity is in hydrocarbon accounting. In this scenario, we have the T stand for the terminal operator, and the P stand for the pipeline operator. Here we have multiple injectors into the pipeline. Here we have the metering team has to provide provision of daily lot production printout. So every producer has to provide their lot production printout and and they have to present their basic sediment and water from the auto sampling system. API weekly meeting is reviewed. Then they will have to analyze the terminal operator and the pipeline operator. ACA team has to analyze this, and we have to check if there's variance between the basic sediment and water. Hope it's not more than 5 to minus 5% BS&WB variance. And if it is, there will have to be a rerun of that analysis, which a control sample is used to do the rerun, and provision of the rerun results is provided. But if it's no, and a sample is not taken, if the sample is not taken, both parties have to agree on the BS&W and apply regulatory directives according to the regulatory guideline. If no, it goes back here. Here we have a proof of the pipeline operator. We have request for your monthly lat meter proving receipt, where you have your meter factor, and where there is no meter factor, there's penalty according to the guideline, and which is provided, and the pipeline operator ACA team collates the lat data in preparation for end of month reconciliation activity, and this there will be a provisional end of month reconciliation sheet that all the parties will review, which is the terminal operator and the pipeline operator, also including the various injector. And the end of month lat reconciliation and production alignment meeting is held, where they have to look at the figures to ensure that all figures are aligned for allocation. And lastly, the lat reconciliation data ready for allocation. This is basically the workflow for production reconciliation in a commingling asset. Basically, I believe in other parts of the world, they have a similar process like this. Basically, this is what we do in Nigeria. So this workflow is based on this methodology. We usually call it the mass balance methodology, where you have to correct the gross volume. You look at the loss. You have to determine the loss by looking at what was received and what was claimed, and also after which we have to certify. The regulator has to certify what was reconciled, loss is deducted, and the final volume is actually allocated. These are some of the conditions that is used in this methodology from what I've just explained, where these are the penalties, where you have meters available, and there's if for example non-meter lat, if you don't have a lat unit and you're injecting into a pipeline, there's a 1% that is being deducted from your reconciled volume, and non-lat meters also 1% from reconciled volume, and non-lat meter proving 2% after 1 month. For the first month, you are giving 1% penalty. For the second month onward, you are giving 2%. When lat meter not available, when lat meter proving not available, there's a provision to use the last meter factor average for the last meter proving factor for the last meter proving. Take the average of the last 3. Then we also have the lat meter. When it's not meter proving for 1 month, you have 1% reconciled that is deducted from the reconciled volume. For 2 months onward, you have 2%. When there is issue with security, whereby meters are not able to be proved due to one issue or the other, same average is being used. When no pressure and temperature measurement is available, the reconciled volume, this factor is used on the reconciled volume. And when there's no auto sampler, a proportion of clean water in excess water, as in water uplift, is assigned to that producer in the pipeline. So basically, this is what the methodology is. This is in line with the previous slide that is used to correct the volume in a commingling facility. There is a walkthrough of basically for production allocation. In this scenario, we have the well production data, we have the facility production data. For this, it's very simple. You can see that this is a lat unit that goes to the terminal. 390 barrel was received, and if you come to company A and B, they actually produce to this lat unit 350 barrels and 100 barrels. That's about 450 barrels for you to start your allocation, you divide this volume by the claim volume. You have a factor, which if you apply that factor of about 0.866 to this volume, you get about, from what we see from this, there's actually dropped in what was received at the terminal, meaning that there was a loss on this pipeline. And if you apply that factor on this, you get about 87 barrels, meaning that company B has actually lost about 13 barrels. If you apply that the same factor also to this 350, you get about 308 barrels. And if you want to do your back allocation to the various well, if you look at this well now, we have 3 wells that flowed in company A, well 1, well 2, and also well 3. If you look at well 3 was down for about 12 hours. So what was produced was 50 barrels. So if you sum this one well 2, which is 150, 50, and this, you get about 400. And if you divide this by that 400, you have a factor for the well allocation, which if you apply that factor to this barrel, 50 barrel, 150 barrel, and 200 barrel, you will get 152 barrel and 114 barrel that goes to well 1 and well 2. So basically, you can see this is a simple back allocation process. When we talk about allocation from the large unit, also back to the reservoir, you can see what was produced here reduced to 152 barrels because of line loss and so on and so forth. This is what makes hydrocarbon accounting complex and very interesting. So, and measurement is very key when it comes to accurate measurement is very key when it comes to allocation, so that you need to have a good allocation factor. And what can simply cause allocation losses and some of the mitigation? One is your metering accuracy and also your water uplift, BS and OB consistency due to lack of auto sampler. Just as I mentioned, the importance of auto sampler in the previous slide. You look at metering accuracy and water uplift, they are within our control. So we have a lot of things to do to make it right when it comes to metering accuracy and water cut measurement. And some of the long-term solutions to ensure representative terminal allocation. Because if you go back to this, if you go back to the previous slide, you discover the allocation factor is around 87%, meaning there was loss of 13% net volume on that particular pipeline. So we need to ensure that pipeline is up and running smoothly, and regulatory agencies have to ensure pipeline integrity and security. There need to be continuous monitoring and surveillance in all injection points. You have to monitor your production on a daily basis to ensure that every measurement that is being carried out, whether quality or quantity, is accurate and precise. You also, I always recommend this when it comes to commingling assets, you have to establish an AC field operation team that monitor each of your operators or injectors injecting into a particular pipeline to ensure that they are doing the right thing and always they are following the standard operating procedure. There's no infringement in any of those key measurement equipment, and also ensure that all measurement equipment is working optimally. There's also need to advance measurement technology. Today we are talking about artificial intelligence, we are talking about VFM, digitalization. So there's need to also advance your measurement system in your process facility to ensure that you can actually mitigate this loss, because if you don't have the right measurement equipment in your process facility, there's a likelihood that you're not going to measure right. And when you are flowing into a asset, it can introduce error into that system, and it becomes a very serious issue when it comes to hydrocarbon accounting. So when we look at production reporting, it's just some of the reports that hydrocarbon accounting do daily and monthly in the oil and gas industry. We have the end of month end month production report. We have the reconcile and the fiscalized volume, which I've mentioned. We have the reports on gas production. If your facility is producing gas, we have gas sales report. We have the monthly report on producing well, which is the MRPW. You have the end of month allocation analysis. You have to look at your allocation. How did you perform? What's your allocation factor? What went wrong? And what affected the allocation factor for that particular month? You have to look at this analysis so that you can improve in the month to come. Deferment report, greenhouse gas competition. This is very important in terms of environmental compliance and clean energy and stuff like that. Loss analysis, just as I mentioned in the previous slide, where there was losses on the line, you need to look at the loss analysis. Where did this loss come from? Is it from issue of measurement? Is it an issue of a pipeline loss due to any activities on the pipeline and stuff like that? Look at your well test reports, your stock volume, etc. There are so many of these reports. It all depends on the asset, because hydrocarbon accounting is asset specific. So some of these reports, not all company produces the same type of report when it comes to hydrocarbon accounting. So your report in hydrocarbon accounting is might be similar, but also different, all depending on the asset. So when we talk about hydrocarbon accounting, some of the things I've been mentioning, the workflow, the process, some of this calculation, we use the hydrocarbon accounting, we use hydrocarbon accounting tools to do this calculation, estimation, and allocation process. This is good for data accuracy. They are very flexible, and in terms of integration, they can be integrated into your production if you have a production software, and also in terms of compliance with the regulatory agencies. Some of the common hydrocarbon accounting tools we have in the industry today, we have the energy components, we have ASICs, we have Avoset, we have the P2 ProCount, and also the traditional Excel. If a company cannot afford to acquire some of these hydrocarbon accounting tools, it's also possible to use the Excel, but it becomes very complex. How do you manage error, and how do you manage traceability while using Excel? So Excel can also introduce error into your hydrocarbon accounting figures, and data is very, very important, and you don't want to give the wrong data to your management. They are good for accurate data capture. They can handle field well facility, your flow meter, your well test data, and your allocation. They can generate your regulatory reports, and it meets some of the ones I've used. They meet international standard, because in the hydrocarbon accounting we have both the internal and external report you give to your regulators, even your JV partners. In terms of auditory, it is good for traceability of data. You want to know who changed this, who calculated this, who imputed this data into the hydrocarbon accounting tool. And using the hydrocarbon accounting tool can help you to achieve that. But when it comes to Excel, traditional Excel, it's not possible to actually have that. So most times people move from the traditional Excel to this hydrocarbon accounting tool for easy hydrocarbon accounting process from your well to allocation. So what are the best practices in hydrocarbon accounting? One is accurate data capture, because if you can't measure properly, you cannot actually account for. So how do you capture your data? Is your data captured manually? Because manual capturing of data introduces error into your hydrocarbon accounting system. So you need to understand that you need to have a digital means of capturing your data. Either you're using a DCS, a SCADA system, any form of digital tool to actually capture your data and link to your production and hydrocarbon accounting system so that you are very sure of this data you are capturing, most especially when it comes to deferment, your well flow, your pressure, your temperature. You need to ensure that these data are captured accurately because they have impact in your hydrocarbon accounting system. Data validation and reconciliation. I talked about the data workflow and validation we can do in our hydrocarbon accounting process. This is very, very important to ensure that figures are aligned and reconciled properly, and ensure that figures are correct. They are actually correct because hydrocarbon accounting is basically garbage in and garbage out. So it's what you put in, that's what you get. So you want to ensure that your data validation process is very, very important. Then your methodology you are using for your allocation has to be top notch, has to be approved by a regulator to ensure that either you're not allocating less or you are allocating more to a producer. So your allocation process has to meet standard requirement and tested that is actually what it's supposed to be. Because I've seen issues arise when it comes to allocation, whereby figures assigned to different operators are not actually what it's supposed to be. It became an issue, became a legal issue in terms of who owns this is what I'm supposed to get and stuff like that, because there was issue with the allocated methodology at that time. But thank God for the regulator to actually put that to stop and corrected the process at that time. In terms of regulatory compliance, everything you have to do from measurement, from production, has to be in line with your regulatory standard and compliance. I know around the world, every country has its own regulation and what to do and what not to do. So for you to have accurate hydrocarbon accounting process and allocation process at the end of the day or the end of the month, you need to ensure that you are actually complying to standard regulatory standard and compliance. Because in terms of regulation, you can see that from one of the slides I talked about the penalties that is being assigned to when you don't do meta proving, when you don't have auto sampling system, you are losing 2%. Just imagine that you are losing 2% of you are losing 2% of 1 million barrel. That's about 20,000 barrel net oil. So and once you translate that to cash commercial in terms of the crude oil price for today, you see that that's huge. And what is even making your regulator to penalize you is even less than what you have been fined. So it's always good that we have that in place. When it comes to integration with production system, one of the things that we can do is to ensure that our hydrocarbon accounting tool is integrated into our production system for easy data acquisition. This is very, very important to minimize error. Then also you need to have a robust reporting system. You want to know, you have to report whatever that is going on at every particular time in your production chain, whether from the wellhead, whether from the process facility, from your latch unit. This report has to be captured and robust to actually ensure to minimize error in your hydrocarbon accounting system. Then when we look at there's need for continuous improvement. You need to keep improving what you have, what you are doing, and everything you have been doing before. You need to keep upgrading your system continuously to ensure accurate measurement. And these best practices, if we adopt these best practices in our hydrocarbon accounting processes, you can see I've seen a lot of changes and improvements in different assets that I've worked with, and I've seen a lot of improvements in terms of what upgrade I've actually done to hydrocarbon accounting process in the oil and gas industry. So in conclusion, I would say Hydrocarbon accounting is a critical business function, not just a technical exercise. It provides foundation for operational decision and financial settlement. So accuracy, transparency, adherence to agreements are very, very important when it comes to hydrocarbon accounting. Thank you.